Hello, everyone. Welcome back to howtotrade.com, and this is the Switch Markets Live community. I'm Shane Vernier, head trading coach over at howtotrade.com and market analyst. Today, we're going to cover a few of the things that we're going to be watching today and throughout this week. This is the week ahead. If you have any questions at all, be sure to weigh in. A lot of times on Monday, we don't see much action. There typically isn't any economic events worth noting. Today, we're pricing in the big, beautiful bill that was signed in to law on Friday by President Trump. I will say that we called it here. You heard it here first. It started to really look like that early in the week. I said, listen, Trump's going to sign this thing on the 4th of July with airplanes, fighter jets flying over. And the idea was pageantry and confidence and all these different things, but the markets aren't buying it. The markets aren't buying it. A lot of this stuff was already priced in. We saw a tremendous rally ahead of the big, beautiful bill being signed, and now you're seeing a pullback in equities. So we're going to have our weekly newsletter out. It's going to come out tomorrow. I'm going to have all the action really in there from today, and we're going to talk about some key levels in markets that we need to watch moving forward. We just missed our entry on the US 30 trade I've had out there for a while, but it's not dead yet, so we're going to be sure to look at that. Big news out of Tesla, and if you guys have been if you've been on X or if you've been watching the news here in the United States, the biggest news in the world right now is, aside from really financial news, is the big, beautiful bill, but it's all about the news about the Epstein client list and the suicide that the United States intelligence agencies, the DOJ, they came out and said there's no client list in there that he committed suicide. Nobody believes that for a minute. Nobody believes that. But what that does tell us is that anytime you see a headline that everybody believes to be true for years and years and years, one day, just like that, it's not true anymore. That's why we don't trade headlines. That's why we don't trade rumors. We look at our news cycle, we know what we know, and then we fall back on our technicals to trade it. So don't anybody get caught up in the media here. Don't get caught up in it, because there's a lot of stories out there that are sensationalized. There's a lot of things out there that people believe and people say. There's a million guys like me out there on the internet. A lot of them are saying really crazy stuff. That's why we try to keep it grounded here. I'm going to tell you exactly what I see in the markets today. I'm going to show you what is moving the markets, and then we're going to talk about the week ahead. It's a light week. I'm going to be honest with you. This is the dog days of summer. I'm struggling to find trades right now. Thought I had a good one earlier today in WTI crude. Missed entry by 3 ticks. That's okay. Things are going to slow down here now. No real huge news events this week. We've got the RBNZ. We've got a trade idea out on the RBNZ, or actually the Kiwi, that I'm going to cover here in just a second. But the biggest thing we have to do is right now is be patient. Let's not get carried away. Let's not chase price. Let's game plan on a Monday and get ready, because business will pick up Tuesday, Wednesday, and Thursday. Just this time of year, a lot of people just take those month-long vacations. I'm not one of them. I take a day off here and there. So good to see everybody back in the room. A lot of new names, a lot of old names, a lot of folks that have been with me for a long time. Yes, sir. Good to see you, Shine. Good to see you, Shine. Kobe. Nice to see you, Kobe. All right. Lewis Shepard. Good to see you, Lewis. Been around a long time, Lewis. So always good to see everybody back. Lita. Good to see you, Lita. Steve Francis. Always a pleasure. If you guys have any questions at all, any markets that you want to look at, now's the day to do it. I don't really have a light schedule, but we only have a few things that I'm going to look at today because I want these ranges to set up. Long holiday weekend, big news cycle on Friday. I want to see these ranges set up for a Monday, and then we can come in and start talking about putting big risk on Tuesday, Wednesday, Thursday. That's been my game plan for years and years now. It's not been bad either. It's not been bad. All right. Team Marina, anything to look for from the Texas floods? The first thing I looked at, aside from, the pictures are amazing and the carnage, thoughts and prayers go out to everybody that's been impacted by that. Truly a sad story on the 4th of July, over the 4th of July weekend, but all the campers that were wiped out, that's not good. And that's just sort of an act of God type thing. I don't really know what to say about it. First thing I looked at financially, I was looking at LNG installations. I was looking at oil fields. It doesn't look to me like it's going to knock much offline. It really doesn't. But we are going to stay tuned. It's not like a hurricane where it's going to knock all that offshore stuff offline. It's more of a, if there is some damage, it's going to be localized. It's not going to be widespread through the Gulf Coast region. So I don't necessarily know that we're going to see much of a reaction at all in energies. We will see how that situation develops today, though, just because we're still taking a damage assessment in that region. Believe it or not, it's just been just a crazy thing. Guys, news happens on the weekends when the markets are closed. It's just the way it is. I've seen it more times than not. Swornoff, hello from India. Good to see you, Swornoff. Welcome. If you guys, like I said, one more time, any questions at all? The team at Switch Markets, if you're a trader at Switch Markets, be sure to weigh in. Jump in there on the chat, introduce yourself. Be sure to ask questions. And also, if you're a how to trader that's been on these streams for a long time, feel free to ask. All right, guys, that's enough. I've wasted enough time. Let's get right out to price action and what really is a fascinating market dynamic that's setting up right now. I'm already thinking pullback buys, and that's really what I want to do today, this week, excuse me. We've got the US30, the weekly chart, and I don't know if you guys remember, but a while back, it was a few days ago, but a while back, we had this trade idea where we were looking to sell from about 44, I believe it was 44,975, somewhere in there. Should have been a little more aggressive. We saw 44,850 is our high, and now you got the big robust sell-off. I do believe that we're going to get up there again to the 45 level. So I'm interested in sort of buying this market. I think that what we're seeing right now today, as far as price action goes, at least from our equities, is you're seeing a situation where everything was baked into the cake. We saw that rally, that sustained rally last week going into the signing of the BBB, which we're going to cover here in a minute, the triple B. It really did pump stocks. People said, oh, that's the biggest government spending bill of all time. How couldn't it be good for equities? There's tax cuts. There's everything in there. Equities markets are going to boom. They will. There's no two ways about it. The question really becomes, A, how do we time this move? B, how does Jerome Powell and the Fed figure into this equation? And C, is the best over? Has it already moved? Or are we going higher? At least this year. I think we're going much higher. The real thing is when, and that's the whole question for retail traders. How do we time these markets? For me, the 45,000 level, I really railed on it for weeks and weeks and weeks. I said, sell it, sell it, sell it, sell it, sell it. We were in position to sell it. We just didn't quite get a chance to sell it. So right there, 48,881, and this week's high is 48,850. So watch this closely. I'm still interested in selling right up there. I'm right around 44,975. I think we're going to get a great trade. But as far as how do we trade the US30 right now, Well, sentiment, it's not because the markets hate the bill. It's not because they believe, oh, okay, we had a chance to read it, and this might not be so good. That's not true at all. What's happening is you're seeing a reaction, you're seeing sort of a counter reaction to this initial reaction that the bill was going to pass. The smart money knew weeks ago that this was going to pass. We talked about it here. I said it's going to pass. Now we're pulling back. Why are we pulling back? Because markets don't move in straight lines, number one. And number two, the markets are sort of correcting themselves a little bit after a holiday weekend. Now, a lot of people are blaming this sell-off today on tariffs and all these tariff threats that are coming across the board. That's not the case. Tariff threats aren't going to move the markets the way they used to. But we already did that dance in April. The reason for this is just a normal reaction, and that's why I really would love to buy a dip here in the US 30. So if we do get a pullback down here, 43,685, we're rocking and rolling with that. I'm still very bullish. The bill's passed. The wars seemingly are winding down. The Epstein files, I don't think we're going to see any high-level bankers or government officials going to prison now over the Epstein issue. Believe it or not, that has to figure into sentiment somewhere. There's a lot of real powerful people on those planes. Everybody knows it. It's not going to be followed up on now. What does that mean to our markets? It means we're not going to get a shock surprise one day. You're not going to see the head of XYZ Bank all of a sudden in shackles. You're not going to see it. So to me, I think a lot of the risk has left the market. Really, since the bombing run in Iran, a lot of risk has left the market. We're not hearing much out of the Middle East now. We're not hearing much at all out of Russia, Ukraine. Not because it's not happening. It's just not in the news cycle anymore. We're very, very short-sighted. We don't have memories. Most people are just sort of lost in their phones most of the day. I mean, I'm no different. I'm not on it all day, but I'm always looking at my news feed and looking at what's on X. And a lot of times what happened last week, we don't even think about. The markets are the same way. So this pullback right here, I think it's temporary. I think it's very temporary. I would love to see what happens when full liquidity gets back in the market tomorrow on a Tuesday. I would love to see that. So right now I've got a bid down there from 43,685-ish. I'd be looking to buy 43, probably 43.7s, something like that. So if we come off another 600 points, and if it did it today, that would be great. I'd be there with bells on looking to buy that pullback, but I could be completely wrong. Something could happen here, and we could definitely find ourselves in a complete market reversal. I don't see it. I just don't see it given the way that risk has left the market. So a lot going on there. Absolutely, T. Marina. Let me see. Yes, sir. Please look at the U.S. dollar, Japanese yen. Absolutely. I will be sure to do that. Actually, up next. Yes, sir. I do want to talk a little bit about this bill, though, and then we'll sort of roll through sort of our docket for this week. We'll be going live every day at this time this week. So if you're joining us on Switch Markets TV, if you're joining us on How to Trade TV or Forex Signals TV, all on YouTube, right now is the time. Or if you're watching us on X as well, now is going to be the time. I'm going live every single day this week. We don't have a tremendous amount of economic events. So this is it right here. Top stories. Elon Musk is going to go ahead and he's going to start his own political party. Richest man in the world wants to do something. Typically it gets done. 10 bizarre things hidden by Trump's big, beautiful bill. They're debating the merits of the bill. I have no idea what's in it. All we know really is you've got no tax for tips. That's up to $25,000. You've also got a tax break for buying an American car if you're an American citizen. I believe the corporate tax rates have dropped a little bit, but the big one is the standardized deduction for both individuals and married folks here in the United States. Those have become permanent. Those are one of the biggest tax cuts around. So those are now part of law. So you've got tax cuts sort of for the middle class. You've also got a lot of gravy in there, a lot of pork. Everybody had to get something to vote for this thing. But also what you have is an incredible amount of government spending. So the debate right now is the government spending going to destroy the dollar and eventually, lead to a debt crisis, push the United States off a fiscal cliff, or is all the spending and everything going to be fantastic? The country is going to grow and GDP is going to grow at a faster rate than the debt does. Essentially, that's the idea behind fiat currency and inflation. That's it. As long as you're making more money than prices are going up, you're good. You're straight. You can get in there and just bid away and be happy in a fiat currency society. The problem is when the rubber hits the road and there's a liquidity crunch like we had in 2008 to 2010. Personally, I lived it, hated every minute of it. It was terrible. It brought on an era of real despair for a lot of folks, and I wasn't spared. I'll tell you that. So I'm not looking forward to any sort of debt crunch or liquidity issues. That's for sure and certain. So I definitely want to touch on that, really the philosophy and what's happening here. I think that it's important to understand that we're really at a historic point in time. So I do want to welcome everybody to the Switch Markets community. Like I said, we're rocking and rolling every day this week. Should be a lot of fun, so please join me. If not, catch us on demand or catch us on the YouTube channels. All this stuff's cataloged. It doesn't go anywhere. The governments get to hear what I just said about the Epstein files. I don't care. That we call it like we see it here. We're not going to sit here and BS anybody. Deals were made. Something happened. I can tell you that. In any case, week 27. I don't know if it's week 27 or not. That might not be accurate. I think it's week 28. Big, beautiful bill. That's the number one on our docket for today. That's going to be your market driver. I was looking at some of the Treasury auctions. Those have been delayed a couple hours. I don't know what happened. Maybe there was inclement weather. They used to have them on the steps of the Treasury. They don't have that anymore. It's all electronic, but so the weather was just sort of a joke. But big, beautiful bill today is driving sentiment. I know there's a lot of talk about tariffs. We'll get into it tomorrow a little bit if I think that it's actually a market driver. I don't believe tariffs are going to do much of anything unless we see something crazy get announced. And we haven't really seen it. There's just been a bunch of deadlines that got shuffled, people talking about early April, and right now the financial markets are sort of blaming the tariff talk for that pullback. I'm not buying it. Tuesday is going to be the RBNZ interest rate decision. It's actually late Tuesday here. It's going to GMT time. It's technically Tuesday. It's probably going to be Wednesday morning wherever you may be. So keep an eye on that RBNZ. That's going to be our trade idea that we're going to cover right now before we get to the dollar yen and some of your other questions. You also have FOMC minutes Wednesday. That's going to be big. I'm going to preview that. We're going to talk a little bit about why this minutes is going to be important, because there's going to be a divide between the doves and the hawks in that room. I want to know who wants to cut and who doesn't want to cut. We could talk also about, is cutting the right thing to do right now? I don't necessarily know, not with prices this high. Thursday, initial jobless claims, not really much of a market mover, but it could be big, especially after last week's NFP report that was a blockbuster. So we've got to be in there. We got to be watching the initial jobless claims. Hey, guys, I hate it as much as you do. I don't believe that weekly jobs numbers are going to move the markets, but they are this time. And the reason why is that topside beat from NFP suggests that maybe the economy is a little bit better than we thought. And if these initial jobless claims start dropping at a rapid pace, there's going to really be, they're going to be able to build the case to hold those interest rates higher for longer and not cut to support economic growth. Friday's UK GDP. It's going to be no donation Friday for me, but we will be looking at the Great Britain pound, trading some of the fallout. UK GDP, typically not a big market mover, doesn't necessarily do much of anything, but it will give us a little bit of insight into what's going on in the UK and the pound. It's all about, is the pound ever going to falter against the dollar? We don't really know. But right now, that's the game for this week. We're going to talk a lot of psychology. We've got a couple workshops planned. This is one of those weeks that, there's a time to push the pace, there's a time to get after it, and there's a time really to hang back and wait. And this might be one of those where you're going to wait for premium setups this week. I like to go hard. I like to go hard on Tuesday, Wednesday, Thursday, but today, Monday psychology, the first thing we need to think about is get off on the right foot for the week. That's going to be really important, because if you dig a hole on today, if you dig a hole Monday, you may or may not get enough trades to make it up Tuesday, Wednesday, Thursday, Friday. That's just the way it is. We haven't seen that big action. Last week was a challenge. This week's a challenge too. As a range trader, somebody that trades ranges, I really look for my range numbers to get hit, and that means price has to move and get into that state of disequilibrium where I can trade with a lot of confidence. Now, I know I can trade in the guts of the ranges and all that stuff, but remember, anything you do in the guts of the range is problematic and it's risky. It really is. So I love to do business on the periphery when I know price is out of whack. And this week, you may see some trends, you may not, but it's going to be tough to get those range trades. So I'm sort of I'm going to be sitting on my hands a lot, and I don't like that. I like to be hyper aggressive. So we definitely want to get in there. We want a game plan for the week ahead. We want to get it going, generate momentum, and a big part of generating momentum is not to fall into a big debt. All right, the triple B is now law. NZDUSD bid is in view. So essentially what this is just a pullback buy. And the reason why I'm looking at a pullback buy here, this is your MT5 platform. The reason why I'm looking at a pullback buy is right from 62%, the back end of that golden zone. I really like this 2-week range. It was a nice big rally we had a couple weeks back, and then you sort of had a doji and an inverted hammer, and now we've traded down in a big way to begin this week. The NZDUSD hasn't been much of a mover for quite a while. You can see a lot of dojis, a lot of chop. I really do like my 13-period EMA coming in right there at that 62% level, and all that's right around 50. Well, I believe it's about 58.75, somewhere right in there. Let's get our crosshairs going. We can do that. So our crosshairs give us a little business. Yeah, right down 59.75-ish. That's going to be a pretty good bid down there from the 3/4 handle. We just have to take out that 60 flat zone. I thought we could get this earlier today. I was really hoping we'd get this to start the week. But hope's for children and losers, so don't sit around hoping. You don't want to spend your days hoping. It's a waste of time. We're going to control what we can control, and we're going to trade how we need to trade. But that right there is a pretty darn good area to attack there in the Kiwi. That's one of those that I have on my radar because of the Reserve Bank of New Zealand is going to speak here in about 48 hours. I like that idea of being able to trade this ahead of that, maybe we'll get a little bit of action. Maybe we'll get some movement. And if this market does, in fact, rally up before we see the RBNZ, maybe we'll get a nice spike down and have an opportunity really to sink our teeth into what I would consider very robust resistance. Anytime my 13-period EMA starts to come up and touch my 62% zone, ooh, I like it. And right now we've got them within about a 12-pip range, so we can actually take a position at 62 and not worry about getting knocked out of the box by a big move. It's really tough for these things to shatter our EMAs. It really is. But we'll see. We'll see what happens. If, in fact, we're in for a changing of the guard, who knows? We don't know. Is the U.S. dollar ready to rebound? I don't see how after the largest spending bill in history was passed. I genuinely don't. I don't see how. So that's one I would watch. I'd be watching that RBNZ closely. We're going to cover that more tomorrow. But the Kiwi is one of my favorites. I like trading the Kiwi. It always seems to, it never seems to disappoint. So sometimes you just feel comfortable with the market. And if you guys have a market that's your favorite, trade it. Trade it every day and don't apologize to anybody. Just reach in and take the money. Traders are like that too. They'll come in and they'll say, hey, you're still trading gold? You're still trading the yen? Is that all you trade? Yeah, that's all I trade to make money. I trade gold and crude oil. Sometimes I'll trade the indices, all futures. I don't apologize. You don't apologize when you're going to the bank. If somebody ever tells you that, oh, you only trade the yen, you only trade the dollar yen, well, that's silly. You need to diversify. Don't worry about it. If you're making money trading the dollar yen every day, trade it. Keep trading it. Tell them if they're lucky, you'll give them a tip. That's what I would say. All right, yeah, definitely going to look at that dollar yen here in just a second. We're going to look at this news. I think the market may have already made their money and baked it in. I agree completely, Lewis. I think that's exactly what we're seeing today with the US 30. T. Marine, I don't think most people know what's in that bill. Nobody does. It surprises me with the AI. Somebody didn't run it through ChatGPT and say, okay, pick out every piece of spending. It's funny, too, because with that legislation, you do have an AI now. You could throw that thing into ChatGPT or DeepSeek or any of these things, and you can say, okay, listen, give me all of the new government spending, and it can pull it out in 5 seconds. I haven't seen one news outlet do that. Not one. They had all weekend to do it. They had 48 hours to do that. We should have seen all those stories just bang, 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 bang. Didn't see one of them do it. Maybe we should do it here. It's just going to take me forever to put the 5,000-page thing through ChatGPT, but these guys should have already done it. Steve Francis, is BRICS going to affect the U.S. dollar as a reserve currency? That's a fantastic question, Steve. I don't believe so. I think that BRICS is a lot of saber rattling and negotiation. We were worried about BRICS last year because of what was happening in the Russia-Ukraine and sort of the Biden administration's positioning towards funding places like Iran. Ukraine, big-time funding to the Ukraine. Not that Ukraine would join BRICS, but Iran, Russia, China, Brazil, I think it was South Africa. The money's largely been cut off to places like Iran. So I think BRICS is going to be – I think what Trump will do to fight BRICS is he'll just raise tariffs as high as he can against BRICS nations. He'll put everything at 1,000% and say we're not doing business, and that'll be the end of your BRICS dollar, at least for now. One thing I will say, it's a great question, Steve. Most of us in the financial community believe that BRICS is going – eventually BRICS will get their own currency. We do. I think it's a matter of time before the world's commodity producers – all decide to gravitate away from Western finance. I don't really see any way around that. Most of us don't, because at the end of the day, you got to have commodities, and if you don't have commodities, you have a real problem. Well, I'm trying to put this delicately. Trump's not going to let it happen. He's going to put tariffs as high as he possibly can to make sure people still have to do business with the United States using the United States dollar, which is a huge advantage, and that's why the United States is sort of the center of commerce, at least for right now. Will that change? Of course, over time, I don't see any way around it. There will be competing currencies, maybe a digital one. Who knows? Next 10, 15, 20 years, it's really hard to say what money looks like. But we do know that commodities are going to be scarcer and scarcer as we move on. As the world moves forward and civilizations grow, there's going to be an impetus on commodities. And it's not necessarily going to be gold and silver and oil and things. It's going to be fresh water. It's going to be real estate. I mean, a lot of people don't believe housing is a commodity. It 100% is. Sure, it's man-made, but without housing, you have nothing. So things like that are going to be, I call them the new commodities. You're going to have people like gold and go, what good's gold if I don't have any fresh water? That's going to be the idea. I think we're going to be in for a major change. And when that happens, to think that everything's still denominated in US dollars is going to be foolhardy. We have to be ready to adapt and move. And I think we can. I definitely think we can. Yeah, fiat money will go away. I think so, T. Marina. It wouldn't shock me if countries got back to some sort of barter system where, hey, I'm going to give you a bunch of gold, you give me a bunch of oil, or I give you a bunch of oil, you give me a bunch of water. Fresh water is a big one. It's a really big one. All right, guys, right here, we got a little bit of news. Like I said, this tariff stuff, I take it with a grain of salt right now. I mean, 10%, an extra 10%, and this is what the media right now is telling you is behind today's crash. It's not true. It's just not true. Everybody's just repricing what they think of the triple B. That's all. Hope I answered your question, Steve. It's a great question. All right, guys, let's get down to business here and see if we can't pull a trade or two. This right here is your U.S. dollar Japanese yen. So I know I got off on a tangent there, yes, sir, but I'm just trying to sort of cover what the week ahead really is, and it's going to be a lot of geopolitical news. So the first thing, I was actually looking at this monthly chart in the dollar yen. The reason why we need to look at monthlies, at least right now, is because we're now trading July. So if we're trading July, we've got to be looking at June's range. We've got to be looking at May's range, and look at that. I mean, this right here, this right here is interesting to me. You've got a big-time sell-off. You've also got sort of compression there, inside bar. So you've got back-to-back inside months for the Japanese yen. So the real question for me is, and I've said the real question 50 times today because I got more questions than answers. I got a lot of them. And most Mondays, guys, I mean, we should spend Mondays figuring out which questions to ask, really. So what do you have? You got back-to-back inside months. That's compression. That's a market that's just loading up for a move. So are we going lower or higher? Well, to open up the month, we've gone higher. We're up about, 1.45%. Not bad. Pretty good move by the dollar that's been absolutely just crushed, lambasted against the yen. So what happens now? Well, there's a couple of things that you can do to trade this immediately. I've really been big on that 147 level, right up there, 147.10. Really hard for me to ignore that. You'll see right now we're up against our monthly Bollinger Band, which is a 146.39, and then you've also got that 13-month EMA up there at 147.97. So there's a couple of different things you can do. You could just get aggressive right at 147 and sell it. I don't have a problem with that. The only thing about that is it might get a little dicey. It might get a little sloppy in here because you're not going to know if you're really wrong until you see this thing probably trade above last month's high. Last month's high is up there at about 148.03. So if you wanted to be aggressive, you could look to sell right around 147.10. You really could look to do that. It's not a bad trade. The problem that I have right now with playing that 38% with absolute conviction is that we're in rotation for 2 months. So this move right here, clearly we're trending on a monthly chart. Boom, loser, 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 loser. Then you get the pullback failure. Okay, 147's been huge. Pullback failure, pullback failure. Do we take it again? I think you could probably take it again and get away with it. You sort of have to take it till proven otherwise to the short. The problem becomes if you wash out the last month's high, this thing gets aggressive in a hurry to the top side, especially if we start to see the dollar gain back some of its lost stroke. I mean, right now the DXY is trading 97.60, up about 0.75% today, 0.64. That's a big move, a big bullish move for the dollar, which has been just dead as fried chicken for quite a while. Well, we're rolling higher here. If you break above last month's high, you could definitely go up and challenge like a 149.34. We just don't know if the bidders are going to step in here or if you're just going to see sort of a failed auction and come down. Very difficult for me to say right here. So knowing that the market's flat, and on the monthly it is, that's a big trend month, and then you got rotation. Now we're starting to move to the top side. Are we range bound still, or are we getting ready to break out? It's impossible to know. So if you wanted to buy right now, I would really discourage that because this is just flat and ugly. It really is. I mean, look at these weeks. This is tough. I mean, that's a nice rally there. We failed. Now we're going right back up. You've got a weekly Bollinger midpoint up there at 146.63. So if you wanted to be real aggressive, you could certainly look at 146.75 to 147 as being potential shorts, maybe for 25 to 50 pips. Should be a bump in the road. The big thing that everybody's watching, though, is going to be that spike high right there, June's high, right there at 148.03. So if you want to short 147.10s, I'd say, yeah, you probably could. Just don't be too greedy with what you're looking for. Be in there to take a little bit of money. It's not necessarily a long-term position. So I hope that works. Team Marina, love your tangents. Yeah, but I'm not a talk show host. I don't need to sit up here and be rambling. We just need to hit the markets and try to stay on task, but I appreciate that, T. Thank you. Nice big rally right there, 147 though. That would be my key level. Now, if you wanted to trade it intraday, clearly the pressure's up. The problem that I have is that, do we get a pullback? You've broken out on the 4-hour chart. There's no question about it. Can we get a pullback? Well, I got to see a swing high first, but my Fibonacci's would tell me to do something like this. But that high, that top's not going to hold, so I'm going to have to just adjust it as we move higher and higher. I probably would play the bullish side of this market until you get up to 147, but I wouldn't do it with much conviction. Like I said, we're just sort of wandering around. Tesla's crazy today. Elon Musk, a lot of heat on Musk. Big time loser today. 7.5%. This is going to be one to watch. If we get down in that 200 range, and I know it sounds impossible, but if we get down into this range where we traded not too long ago, back in April, if we start seeing Tesla crater, this could definitely be a keeper down there right around 2.25, maybe 200, and we'll be watching this 920 on the daily closely to get our bid signal there for an opportunity to buy Tesla with the proper timing from the proper level. That's what we've got to do. If we don't have good trade location and good timing, then it's a waste of our time. If you're going to swing trade Tesla, if you're going to look to invest in Tesla, you don't do it from here. I don't believe you do it from here. I think you got to wait because this washout down to 2.25 to 200, as charged as things are right now, and as much power it looks like as Trump's willing to wield, Tesla could start losing government contracts any minute. It would not shock me, guys. It would not shock me. Be careful with Tesla. Wait, because you just don't know. But what I did want to put up there was this US dollar Japanese yen on our 920 coded. Yeah, and there it is. So if you're on a daily chart, right there was your sell, which we just showed you the key levels. Probably not a good idea to sell down here. Now you're rotating back up on that daily. That's a pretty good move. We've got a gold bar right now, which tells us that you're probably going to see that crossover develop fully. If in fact it does, then you're going to have a shot. You're going to be able to take a shot to the long side. It's not a bad trade. Just remember, we've got huge resistance right there at 147. If this daily's elongated like this, I would play this tight. My stop would be there, 144.12, 146. Even that's really a stretch. I'd probably be passing on that. Let's go to a 4-hour. Can we get any better, or have we already got our buy? Yeah, you already got your buy. And that's okay. That's the way this life works. Sometimes we get them, sometimes we don't. Right there's your top. Boom. There's your bid. That bid came across the board July 3rd, right before our holiday. There was your pullback. Boom, and then you took off again. Pretty good trade. We did one of these on the 9 EMA using Fibonacci's to manipulate your entries. That would have been a situation where you could go 920, manipulate your entry, and really do well. You're trading that yen bids from right above 144 back into your golden zone. You got a heck of a deal on that. Right now, that thing's off to the races. I think you're going to run into some trouble up there at 147 if you're holding. That probably would be where I'm taking profits. If you're long. If you're not long, don't worry about it. All right, guys. Well, if there's no other markets really to cover, we can look at all these things. I'm going to put a lot of this stuff out in the Switch Markets newsletter here that's going to be developed later today. I got to see the markets close first, though, before we pick which market we're going to target. I want to see a good range set up. But something like this, gold. I get asked about gold religiously, and that's cool. Everybody trades gold. Everybody loves gold. I like gold. I'm looking at gold futures trade right now. I'm about 30 ticks off of it. I would love to get that entry. Been a great Monday for me. Spike low there, spike high. These are your monthly charts. Monthlies are big for me. Spike low, spike high, pullback zone right there, 3,100. That's what I call hot. That's a great pullback, nailed it perfect. And then we got the great rally. You guys that were here a couple months ago, we were all over that. So right now, what are we? Still got to be a little bit bullish. You still have to be bullish just because the dollar's in such a bad condition, and $4 trillion in government spending over how many years. That should boost inflation. Anytime inflation looks like it's going to go up, you're going to see a bump in gold. So something like this. Let's go to a daily. Okay, the daily's impossible. I don't like this at all. Very, very tight. There's sort of your hammer. Looks like we've already missed our retracement level to the long. And we did. So that was a beautiful thing earlier today. So if you got that, great. For right this minute, I would be extremely careful doing much of anything with gold. If in fact you wanted to trade it, keep an eye on your key levels. Last week's high is a big deal. High right there is 33.65. Keep a close eye on that. You may, in fact, see a break above that zone. I really wouldn't get into Fibonacci's here. You could, if you wanted to, do something like this. It's above 38%. So theoretically, we should at least see, a test of 50 or 75. Those are probably pretty good scalp zones to the short. Just keep your profit targets realistic, probably $2.50, maybe $3 on something like that. And preferably, I would be looking at 33.74-ish to the short. That would be one that you probably would want to get if you can. If you can. All right, everybody. I think I'm going to go ahead and sign off for now. Not a whole lot going on. It's a pretty good market dump. As far as what we see out of the US 30, I don't expect it to last, but it may. Remember, the markets can be very, very vindictive. They're out to get as many people as they can, and a lot of retail folks showed up and they bid this thing, going the BBB is going to bring us home this week. That's not how markets work. Typically, the smart money was already betting that thing was going to get passed, and now the retail money comes into the equation saying, okay, we're going to go. The smart money's starting to take profits. The big pullback wipes out all the retail longs, and then you start to see the true direction of the market. I will say this. I don't see any other way but up for U.S. equities. The only thing really putting any sort of restrictor plate on the upside trajectory, now that a lot of the geopolitical uncertainty has left the building, is Jay Powell and the Fed. And we're going to see if Jay Powell even finishes this year. You guys heard it here first back in March. I said he's finished. I think he's finished. We'll just see. We'll see how it works. That's for sure. Trump puts tariffs on the yen. Yeah, I mean, we'll see, Lewis. Like I said, don't get too carried away with the tariffs. The tariff talk, we already had the tariff hysteria. That was back in April. Don't get too carried away with tariffs just yet. If there's a huge tariff that comes out, I'll write about it and be sure that all of you know about it. But right now, I'm just seeing a bunch of stuff that's just scuttlebutt. 10% or extending deadlines, doing this, doing that, doing the other. I'm not too worried about it. Not yet. Now, if we see a big announcement, which could come at any minute, then we will. All right, everybody, I'm going to go ahead and sign off for today. I think it's a pretty good day just to strategize. We're going to build out the Switch Markets newsletter. All the Switch clients, you're going to see that in your email inbox, so be sure to give it a click. I'm going to give you the market of the week there. We're also going to go ahead and write up the key events and give you an economic calendar that you can use instead of cursoring through a million different things. I'm going to give you 3 events that you probably need to be watching, a key market, and some write-ups. And we'll see exactly where we're at here. As Trump would say, we'll see what happens. We'll see what happens. Now is not the time to force your leverage. Wait. Be careful. Summertime doldrums, a little bit thinner than usual, and big breaking news items seemingly every other hour. Be careful. Caution's the better part of valor. Let's keep our heads straight. Let's be smart. And by Friday, we're going to be talking No Donation Friday. You guys are going to be putting money in your pocket, and then we're going to be talking about going into the weekend. All right, guys, I'm going to go ahead and sign off. You have a fantastic session. Thanks for joining me, everybody. Let me see. Irfan, Lewis, always a pleasure. Lewis, Silo, Lita, you guys have a fantastic session. Trade the action well, and we'll talk soon. See you.